Namaskar and welcome to 9 to 5 updates. Today we're breaking down Union Budget 2026 completely, every major number, every important change, and what it actually means for you. Whether you're a trader watching the markets crash, a salaried person looking for tax relief, or just someone trying to understand where India's economy is headed over the next 12 months. Let's start with the big macro picture. For FY 2026 to 27, the government has budgeted total expenditure at 53.47 lakh rupees crore, with non-debt receipts coming in at 36.5 lakh rupees crore and net tax receipts at 28.67 lakh rupees crore. For comparison, this year's revised expenditure is 49.6 lakh rupees crore. The fiscal deficit target has been set at 4.3% of GDP, slightly lower than this year's revised 4.4%, showing the government's commitment to gradual fiscal consolidation while maintaining growth momentum. The real star of this budget is capital expenditure. Capex allocation jumps to 12.22 lakh rupees crore for FY27. That's an 11.5% increase from this year's revised estimate of 10.96 lakh rupees crore. This money will flow into highways, metro rail projects, railway modernization, defense modernization, logistics parks, and urban infrastructure. When government spends 12 lakh rupees crore on creating physical assets, it creates jobs in construction, steel, cement, and creates a multiplier effect across the economy. Major sector allocations include transport at around 5.98 lakh rupees crore, defense spending at 5.94 lakh rupees crore with 2.31 lakh rupees crore specifically for capital assets, rural development at 2.73 lakh rupees crore, home affairs at 2.55 lakh rupees crore, and agriculture and allied sectors getting 1.62 lakh rupees crore. These numbers tell you exactly where government priorities lie: infrastructure, security, and rural economy. Now let's talk about what crashed the markets yesterday: the STT hike on F&O trading. Securities transaction tax on equity futures jumps from 0.02% to 0.05%. That's a 150% increase. For options, both the premium and exercise STT are now unified at 0.15%, up from 0.10% and 0.125% respectively, roughly a 50% hike. The Finance Ministry justified this by saying F&O trading volumes have ballooned to 500 times India's 300 lakh rupees crore GDP. They're projecting STT collections to jump from 63,670 crore rupees this year to 73,700 crore rupees next year. Result? Markets had their worst budget day reaction in 6 years. Sensex crashed 1,843 points or 2.23% to close at 80,722. Nifty fell 593 points or 2.33% to 24,825. Small caps and mid caps bled even more. Traders, your cost of doing business just went up significantly. Long-term investors might find buying opportunities in this volatility, but derivatives players need to completely rethink position sizing and strategy. For salaried individuals and senior citizens, there are some relief measures. The tax deduction limit for certain interest categories for senior citizens has been doubled to 1 lakh rupees. TCS threshold on remittances for education and education loans up to 10 lakh rupees has been removed, and the overall TCS threshold raised from 7 lakh rupees to 10 lakh rupees. Good news for parents sending kids abroad. Annual TDS limit on rent payments increased from 2.4 lakh rupees to 6 lakh rupees, meaning fewer small landlords get dragged into TDS compliance. Time limit to file updated returns extended from 2 years to 4 years, and relief continues for 2 self-occupied properties. On indirect taxes, select cancer medicines and medical equipment see duty reductions. Certain EV components and green energy inputs get tax rationalization to boost clean technology adoption. On the flip side, some luxury consumption items face higher duties to protect domestic manufacturing. The budget's big thematic focus is on 4 groups: Garib, Yuva, Annatta, Nari, poor, youth, farmers, and women. This translates into 10 priority thrust areas: agriculture and rural prosperity through irrigation and value chains, MSME support and Make in India incentives, employment generation through infrastructure, human capital development, energy security and green transition, urban development, digital and logistics infrastructure, women-focused welfare schemes, social safety nets, and ease of doing business. What does this mean for different audiences? Traders, your F&O costs just doubled. Rethink your strategy immediately. Long-term equity investors, volatility creates opportunities. But watch how this 12 lakh rupees crore capex gets financed and what it means for inflation and bond yields. Salaried class, no big tax cuts, but compliance got easier with higher TDS thresholds and more time for corrections. Economy-wide 12 lakh rupees crore Capex push keeps India's high-growth story alive, while 4.3% fiscal deficit shows spending discipline. The government is sending a clear signal: high growth through infrastructure and manufacturing is priority number one, but ultra-speculative high-frequency trading that doesn't create real economic value will face higher costs. India remains positioned as the fastest-growing major economy, with 7.4% real GDP growth projected, but with better fiscal discipline. If you found this complete budget 2026 breakdown useful, and you want sector-specific analysis on which stocks benefit from the Capex push, or detailed videos on how the STT changes impact different trading strategies, drop your requests in the comments below. For daily news updates from India and around the world covering markets, tech, geopolitics, and sports, subscribe to 9 to 5 updates and hit the bell icon so you never miss important information that affects your money and your life. Namaskar.